Right. So Deepak, if you can just start, I'll just start.
Yeah, go ahead.
Yeah. Thank you all for joining us today. We have with us Mr. Deepak Korah George. He's a chartered accountant at Korah and Korah CAs. So the topic for today, this is the third session in the Enterprise Blueprint series, which we are doing, TiE is doing with partnering with TiE Coimbatore. And the topic for today is staying on top of statutory compliances, the year-end saga. So I'd like to hand it over to you, Mr. Deepak Korah. I think you can take it from here.
Right. Thanks, Jose. It's a pleasure to always take TiE Kerala sessions. This time, I think it's TiE Kerala x TiE Coimbatore, which is a tie-up with TiE Coimbatore, which is quite good. I want to thank Divya for calling me and giving me an opportunity to come and take this session. And of course, Jose, to you also, and Swati from Coimbatore. So what I will do is, since we just have 1 hour, that's the schedule that's given to me. I will straight away jump into my slides, which will probably help both of us to understand the topic as I move ahead. Okay, so with your permission, I'll just share the screen.
Please, I have given you access.
Yeah, thank you. So I hope the wordings and all that on the screen, the first screen, is visible.
Yes, it is.
Right, thank you. So as Joe said, the topic for today is very apt for the week, rather. It is statutory compliance and staying and the year-end compliance saga. Now, year-end is always a problem. You have problems from the investor, problems from the client or the firm or the company per se, problems from the consultants, problems from the bank, problems from the employees and all that. Problem in the sense that everything is pushed always to the year-end, right? It's probably when you wake up and then you uh, find out that, okay, this is the time when I have to act on 1 more week remaining. And that too, what happens this week, there are a lot of holidays coming the weekend. So that also makes it a bit more difficult. So these are things that are, inevitable. Such things happen. And it's not just 1 year or second year, third year. Every year, this pressure towards the year end always is something that we face. But anyways, what I will take is I have a, I have in fact some detailed slides which will probably help me to run through the session and explain to you 3 aspects, right? Why stat compliance is, or staying on top of stat compliance is important, or why is it required? Number one. Number two, we will just introduce ourselves to the most important stat compliance. Of course, this being just a 1 hour session, I won't be able to, take a class on income tax and GST and FEMA and SEZ Act and all that. But we'll just pick up some important sections in the laws that are laid down, and then we'll practically find out. The last topic is, of course, how do you take steps to or create an alert system, to ensure that it's not just the last 5 6 days that you actually do everything that you can. You will have to plan 11 months before, so that the last week of the 12th month uh, is proper and is flowing smoothly. Over to the next slide. The next one is, yeah, just checking if I can move on. Yeah. So this is the topic that I will divide. These are the 3 topics, and this will divide my entire section 3 segments, right? The first one would be why it is required. Now that probably all of us understand, like it's very logical why stat compliance is required. But we'll just introduce the topic through through this segment. The second one, of course, is what are the different stat compliance aspects that you have to keep in mind. And this is when your sections and rules and act, everything. Of course, we won't uh, talk about any specific section or any specific rule or anything, just in general. If you take the Income Tax Act, what are the areas there that a proprietorship or a firm or a company, even a public or a private company should follow, right? Even a company going for an IPO also. It is very important that these small to big compliances are taken care of. So that's the agenda for the discussion. And the first 2 topics will sort of seal the session. And then finally, from a practical perspective, how do you actually take steps? How do you build the alert system within your organization, so that these month-end, quarter-end, year-end deadlines don't get missed out? Because nowadays, what happens is, after all these frauds which took place, in fact, the Satyam scam, which took place late 2007, early 2008. After that, the Companies Act as such, the entire thing was modified to include a lot of penalties, fines, imprisonments, and all that. In fact, it's called the Satyam Act of 2013, although it happened in 2008. So you have things which will haunt you 6 months down the line. Now, 31st, if you don't follow first day of April, April Fool's Day, probably you can sleep tight. There'll be no issues. But then 6 months down the line, when you start getting your external, internal auditors in your company, and when they start doing stuff, that's when the skeletons come out, right? And to avoid that, how can you build an internal control system or sort of a process-oriented system in your organization to keep in check all these deadlines, right? So first things first, and that is why staying on top of statutory compliance is important. I have 3, 4 points here. The first one is time and money. Now, more important than money these days is time, right? All of us know something that we cannot buy because the other part of the other thing that is money is something that will come and go, but then time is something that will always move ahead, right? Unless the battery in your clock is not working. Um, Time and money can be saved and put to better productive use. What happens is you, especially under the Income Tax Act, you end up paying unnecessary interest, right? Interest on tax, unnecessary fines and penalties. It is not just the year end. These compliances are meant for the month end, for the quarter end, and the year end. But if you don't follow the monthly compliances, the quarterly compliances, for example, under Income Tax Act, what we'll deal with it in the later part of the section, there's a concept called advance tax, where the government wants you to, they're telling you that, hey, you estimate your taxes for the year, although you're going to file the ITR 6 months down the line, it is okay, but you have to estimate now how much your income will be, and then pay every quarter. That is why it's called advance tax. So you pay that and then fall in the government exchequer immediately, and they can use that money for their development and all that. So this advance tax is something that it is highly neglected by small scale as well as large scale enterprises, and especially within the small scale enterprises. That is something that will lead to heavy interest because the interest meter is running from the day you're supposed to pay advance tax, which is this financial year, till the date you file your ITR, which could be 31st July, 30th September, or 30th November, or whatever. So if you follow and if you're on top of stat compliances, then time and money definitely can be put for your business. Because nowadays, clients, especially who come to us after a certain period of time, they are the ones who are ending up paying a lot of fines and penalties and all that. Some of them because they are not following the stat compliances, although we tell them. And what happens is there are a lot of time that is diverted from business. At the end of the day, uh, when you are an entrepreneur, you have to spend at least 80% of your day looking out or marketing or putting the product in the market. But what happens is they're completely reversed. So the 20%, 80% of the time, they're behind compliance. And that is a waste of time for what they are put in for, right? So time and money is something that can be used more productive if you are on top of that compliances. Coming to the investor eye, compliant organization is better perceived by investors. You have due diligence assignments by the consultant of the investors. Once the investor is happy with your pitch, is interested in putting a share of their interest into you, then what will happen is immediately there'll be a due diligence from the investor side, right? And that is when, even though your company's audit or your firm's audit is complete, you'll be facing due diligence from the investor's auditor or consultant. So if compliance is not met, then it will come out definitely in due diligence. They'll give a report with all these compliance issues, and that is not perceived well by the investors. If you look at the foreign investors, right, especially the people in UK and Germany and all that, they are hell bent on compliances. They really don't. Uh, I mean, the figures, that is revenue and expenses and profit and all, probably will come second. The first one they are very concerned about is compliance. And a report which has a lot of gaps, a lot of points on compliance issues will definitely raise the orange signal, orange light for the investor. So to ensure efficient due diligence, to ensure efficient takeover by the investors or flow of funds into your company, it is very important that compliances are kept in check. No unpleasant surprises. This usually comes, like I was telling you, about 6 months down the line. 1st April, 2nd of April, you can sleep peacefully. But 6 months down the line is when you face the heat of what you were supposed to do 6 months prior, or 8 months prior, or 11 months prior. And this is what comes through audits, right? That is why you have statutory audits. So statutory audits are basically aimed at finding out whether the company is in check, is in check of the compliances, that compliances, and they report to the apex body who has brought up this Companies Act. So unpleasant surprises is something that you can avoid. Uh, something that can be kept in check with. And one advice is also, if you have chartered accountant consultants or any other consultants that you are in touch with on a weekly or a monthly basis, then you rope them in before 31st March, right? And just give them an extract of your financials or about how you have fared so far. And they'll be in a better position to advise you that, okay, these are things to do before 31st March. Uh, there'll be small things which will become big 6 months down the line. So to avoid that, it is better that you work in line with your consultant, and they probably advise you and give you tips and ways to streamline before 31st. In today's world, interconnected world, bad news becomes viral. Now all of us know what happened to Byju's. Once India's most valuable startup, now you know where it is. The starting point of that was from the resignation of auditors. Deloitte, yes, Deloitte was the main auditor of Byju's when they were there. And what happened is, in the current financial year or whenever they were auditing, they did not get the data for audit. Basically, they were one month behind, or 1 year behind, so as to say. So because of that, and the auditors had a difficulty in consolidation of revenues, because Byju's were on a massive takeover spree, and all these the sales from all these organizations had to sort of be compiled and consolidated, and the auditors had difficult time in doing so because the company wanted a different um, um, figure of revenue to be there, to be perceived by the investors. The auditor wanted a different figure to be placed on the financials and all that. So with that resignation of the auditors, that was a spark, right? That bad news spread, and that is how it is perceived as Byju's dropping out. So negative news definitely is something that should be avoided, because in today's virtual world, bad news really becomes viral. So that is the end of the first segment, where I had to just explain to you why staying on top of compliance is necessary. Um, from a company owner perspective, of course, performance evaluation is required before 31st March, because you need to understand how your company is fared in the last 1 year. Plan for the future, because after 31st, the next meeting is going to be a kickoff meeting for the next financial year, right? So for that also, you need to be ready and you need to close out everything before 31st March. You will have, for some companies, your KPIs will be dependent on the financial performance and all that. So they'll be hell bent on increasing sales and booking sales and all that. So that is also to be taken care of. So legal compliance is there. Financial reporting, if you are part of an investor group, 31st March, they will definitely require you to send a set of financial statements for their consolidation, right? So you will have to be ready with that. Probably people would have asked by now that you send the statements from here and then we'll consolidate. So that statement needs to be correct to an extent, right? You need to pass all kinds of entries there and then find out um, uh, and then give it to the investor for compilation. So performance evaluation, KPIs, year-end meetings, previous results, and of course the target for the next year will only depend on what you've achieved and what can come out of the year-end compilation. Those were the important points why compliance and to statutory rules and regulations are important. In the next segment, we will take one by one what are the important compliances you have, starting with the Income Tax Act 1961. Then we go on to GST. We'll take up Companies Act. We'll take up an interesting act called FEMA, which has gained a lot of importance in the recent years. And then we'll just touch upon Provident Fund Act, right? Uh, Moving on to Income Tax Act, what we'll do is, of course, the full entire 300 sections cannot be discussed here. So we'll take up important areas, especially what you need to look into before 31st of March. Three major points here in this particular slide. You have allowances and disallowances of expenses, cash payments, and foreign payments. Before 31st of March, it is quite important for you to take a stock of your expenses, right? Take an extract of that and find out which are the pending payments. If you have money sitting in the bank account and if your cash flows are good, then why not? Clear all the dues before 31st of March. There's an aspect called TDS, right? Tax deduction at source. That is, whenever you make a payment, by law, by statute, you are required to deduct some amount, probably it is 10%, 2%, 1%, whatever, and pay the remaining to a contractor, consultant, the landlord for rent, etc. Nature of expenditure is quite important. The first point here, where you need to demarcate between what is your personal expenses and what is your business expenditure. Of course, personal expenses will not be considered for uh, income tax purposes. And what suppose you have incurred personal expenses and the company has incurred that for the director or for the employees or for any other person, then what will happen is most likely when the income tax is the calculation is done, that expenditure, the personal expenditure, will be added back as an income, right? So the feature of allowances, disallowances, basically allowances is all those expenditure that is allowed as a reduction. It means for the purpose of computing. So here there are two aspects. One is the profit and loss account and one is the IT computation. The profit and loss account, which is given to the shareholders, that is not what is exactly going into IT computation. Profit and loss has a lot of items which is not considered for IT computations. That is just a financial statement that is used by the investor or the shareholders. IT computation is a real deal which comes after the profit and loss statement is made, wherein you highlight, okay, these are my allowable expenses and my not allowable or non-allowable expenses. So the non-allowable expenses will be added back to your income because Income Tax Act says that, look, as a company, as a firm, as a proprietor, you cannot expend on this item. And if you have done that, it will be considered as an income of your company. Well, that is when you have shown it as an expense in your profit and loss statement. If you're not showing it as an expense in your profit and loss statement, there's no question of it flowing to the income tax computation. So not all expenses in the profit and loss statement that you prepare can be considered for income tax computation. There are several rules and regulations for this. And whatever are the non-allowable items that will be added back, shown as income, you have to pay tax on that basically. It'll be like your revenue item, right? So nature of expenditure is very important to understand and to draw kind of a difference between personal and business expenditure. Coming to TDS, like I said before, there is a compliance that you should deduct X percentage before making X type of payment. If you have not done that, then by the time you have not done that till you file your income tax return 6 months down the line, then you probably what will happen is that part of the expenditure, 30% of that, the rule says that will be added back as an income item. So even if 31st March you have not taken care of TD deduction, you still have a few months in the next financial year to take care of it before you file your ITR. But ensure that before you do it, before filing ITR, TDS compliance is met. Because if you don't deduct and make the payment to the vendor or the consultant or the landlord, then what is going to happen is that amount of payment, right? That expenditure, 30% of that will be calculated separately and added as a part of your income. You will end up paying tax on it. So actually, what is your expenditure will be considered as an income by the income tax department, and you have to pay whatever 25, 30% tax on that if you are a company. So TDS is one aspect that you should take care, and which most companies, in our experience of audit, most companies miss to even think about TDS. There'll be instances where you deduct the amount and you keep it in your pocket. Well, that is not your money. You have to pay that because you're acting like an agent, right? You have to deduct that amount and pay it to the government. So if there's a deadline for that also, if you don't do that, there's again fines and penalties and interest for that. And the last part here for the first point is whether it is paid. There are some items which is only allowable as an expenditure if you make the payment. Items like rent and all that, if you have not paid before 31st March, it is an expense payable item. still it will be sort of allowed for your income tax computation because you'll pay it subsequently. But there are certain things under a particular section of the Income Tax Act, which includes like bonus and employee provident fund and interest on bank loan and all that, which if you don't pay before 31st March, right? If you don't pay 31st March, there are some, if you don't pay 31st March, some which if you don't pay before the date of filing ITR, it will be disallowed, which means it will be considered as an income part. So there is a list of 8 or 9 expenses, of course, and one has recently been added there, which says that up to filing ITR, if you have not made these kind of payments, interest on bank loan, bonus, and commissions, and you'll have employee provident fund and all that, before the due date of filing ITR, it will be added back, shown as an income on which you have to pay tax. So in your profit and loss statement, it will be an expenditure item, right? But if you look at your IT computation, that same thing will go on top. It will be added back as an income item. Coming to cash payments and cash receipts, there's one section which says that if you pay more than 10,000 rupees in a particular day, a small sum of money, 10,000 rupees, then that expenditure also will be disallowed, right? It will be considered as a part of your income and you will pay tax on that. So for companies, firms, when they go through audit and when you go through your cash book, right, in whatever software you're using, you'll often find items where payments have been made crossing 10,000 rupees. Of course, that will be cash payment. Online payments more than 10,000 rupees, there's no limit, of course. There's no problem, right? You can pay whatever you want. But cash payments, if the entry is more than 10,000 rupees to a particular person in a particular day, the entire amount will be disallowed, is what they're saying. Now, since you know about this particular rule or you will know about this particular rule, it is better that whenever there's an instance of cash payment more than 10,000 rupees, you give it on 2 different days, right? Now, what happens is you may have to give it on one particular day. So you will have to make arrangements to sort of split it either to 2 different people or 2 different days, right? What most people do is they give more than 10,000 rupees, but then they'll pass it as an entry as less than 10,000 rupees. So to avoid that, it is better that you actually split these kind of payments. If 20,000 is to be paid to a particular person in a particular day, you split it as 10,000 and 10,000 one day, 10,000 other day, then you'll be within the limits. So this particular section is something which is blatantly ignored by a lot of people, and that is this 10,000 limit cash rule, which says that if you have a payment of cash more than 10,000 rupees to a person a day, then that will be disallowed, which means it will be added to your income. You will pay tax on that. So you can take steps to play with it to somehow be within that 10,000, within that day limit or within that person limit. Foreign payments and receipts. Well, many of you would be involved with making payments to outsiders. You will have consultants working for you from abroad. You will have IT payments to do, right? You will have some funds to be given as dividends or some consulting fees or contract fees or whatever. So for that, there is a set of compliances to be taken care of. You have something called a Form 15CA and a 15CB, which regularly comes to any CA office. It is an online form. It is a form which communicates the bank that the CA has had a look at it, especially when the amount is more than 5 lakhs. When the amount is less than 5 lakhs, you just have to get one form called 15CA and give it to the bank. They will transfer your funds outside. These are all foreign payments, like you'll have to pay some employee salary or interest or royalty or things like that. Business-oriented expenses, payments. So for that, if it's below 5 lakhs, then of course it is 15CA. If it is above 5 lakhs, then you need to get a certificate from the chartered accountant with the form 15CB. Give it to the bank, and banks, of course, they will not process the foreign payment without getting the 15C because it's part of their checklist, right? They will certainly ask you to get hold of a CA or a cost account who can sign this particular form, and then you can submit that to the bank to get your receipts, to get your payments out of the country. That is about foreign payments and receipts. The fourth item here is something that I've already told you in the beginning, that's advanced tax, right? The compliance which we conveniently forget. Now, this is something that will fetch you, that will probably affect you in terms of a lot of interest, avoidable interest costs. Now, what this particular section rule says is that every quarter, right, April, May, June, Q1, Q2, Q3, Q4, you'll have to choose, there's a particular date where the government has given you that within that date, you'll have to make advance tax remittances. So what they say is that, boss, you estimate your income, your revenue for the financial year. If you're going to earn X amount of money in Q3 and Q4, let's do a calculation for the entire year and pay some tax in Q1, some 15% tax. Pay 45% tax in Q2, pay 75% tax in Q3, pay the full amount before March, is what they say. Because if you do that, and then you file your ITR 6 months down the line, there'll be no interest. Otherwise, what will happen is, if you don't do an estimation, if you say, okay, let me pay tax when I have to file the ITR, I don't care about advance tax. What will happen is 6 months down the line, when you file your ITR, right, you will have interest on top of the tax because you have not complied with the advance tax provisions, which means that from the date the advance tax is liable to be paid for every quarter, till the date you make the payment through your income tax return, till that day, your number of days will be calculated into certain percentage rates and all that, and interest will be added to your tax. So that is something that you can avoid, right? And that's the point we were referring to. Time and money can be put to better productive use. Annual tax return filing, something that all of us are accustomed to, right? If you look at the statistics in India, it's very poor. The number of filers in India, let alone the fact the number of people who pay tax. You forget about that. The number of filers in India itself is below 7%, 6%, and all that. So government is taking a lot of steps to force you to file a return. That when you file a return, your entire picture will be then available, right? Of course, they know the data about you much before you file your ITR, because a lot of online forms now are available to them. Even the FASTag meter, that FASTag sticker that you put on top of your cars, when that is read, there's a set of data that's given to the government. If you own 5 cars and you don't file an income tax return, then they might send you a notice like, say, boss, you're owning 5 cars, there's no return from your side, please explain. That is when you have to sit and and scratch your head and try to get a response that's to be furnished. So if you don't file the ITR, there's this normal late filing, there's an interest, there's a penalty. And what happens is, if you're a startup, mostly in the first couple of years, you may be booking a loss, right? Because you're still in the R&D phase, and you're still in the phase of heavy advertising. Sales are coming in, but then you see a market 3 years down the line, because the first couple of years will be a dip in terms of the figures. Now, when you have a loss, and if you don't file your ITR, what will happen is this loss would not be carried forward to the next year. So what happens is, if you don't get a carry forward benefit, the year when you make a profit, you will not be able to set up that against the loss. So even if you're loss making, you must file your ITR if you have zero tax to pay, because if you don't file that, then your loss for this financial year cannot be carried forward to the next year, and to the next year, and to the next year, and finally in the 8th year you'll be making a profit, and you end up paying tax there. Whereas you can set off that profit with the previous 7 years loss and still end up not paying any taxes in the 8th year. So that is what you will take care. More than the fines, penalties, interest, and normal things that come into the picture, that the refund situation becomes critical when you delay filing of the ITR, because if you don't file before the due date, uh, even if you have a second chance to do it, still you'll lose this refund or the loss carry forward opportunity. Even if you have refunds that you want from the income tax department, that is, you've paid extra tax, advance tax, going forward, you have a lot of TDS that you can set off, a lot of credits and all that, a lot of reductions. Then there you will end up getting a refund from the government. If you don't file your ITR within that date, refund also will be stuck, right? You will not get refund with that particular period for that particular financial year. So that's the importance of annual tax return filing, a very small, yet a very common compliance, yet a very important one. Coming into and moving into goods and services tax, GST, I put just 3 points here, but GST now, after 6, 7 years of its inception, it's become almost as complicated as income tax act, and you have a lot of compliances here as well. The top three is what I will just introduce to you today. The first one, of course, is the last one here, that filing returns on time. The problem under GST, unlike what it was under service tax and excise and all those previous taxes, was in GST right now, you will have to file multiple returns, right? One, if you have one company, then the company is supposed to file either, if your turnover is above a particular limit, you'll have to file 2 returns in a particular month, right? The turnover limit is 5 crores. If you are making 5 crores in a particular year, above that, you will have to file two returns in a particular month. That's 24 returns for one company. Imagine if you have, and that to one registration, yes, registration. If you have another company of yours in Karnataka, right, one another in Tamil Nadu, one in Coimbatore, Tamil Nadu, Coimbatore is, of course, the same thing. If you have one in, let's say, Uttar Pradesh or somewhere in the north, you will have to file for each GST registration. So one registration itself is two returns a month. So 24 returns a registration. And then you can multiply with the number of registrations you have. So GST is burdensome in the sense the returns, the number of the frequency of returns is quite high. Unlike what it was, income tax is only one return, right? Service tax is only two returns. GST, for some reason, they want a monthly kind of a declaration from you, and that is why the number of returns in a particular goes up. And if you miss the return by 1 year, by 1 month, there's of course a late fee attached to it. It's 100 rupees, 200 rupees a day. So you will not know because it's very meager in the beginning, but then if you delay it by 6, 7 months, the per day late fee will just build on. That's something that's not necessary cost and money that you can otherwise use it for your productive use. Second one, of course, is e-way bill and e-invoicing. E-way bill was both of these actually are new concepts, 3, 4 years old. E-way bill has become very important. It is when you send goods uh, more than 50,000 rupees on a consignment basis. You send it to your your customer, right? As a supplier, you're sending it to the customer. You will have to generate e-way bill. When he receives, he will have to generate an e-way bill, and the transporter will have to coordinate in between, right? So this is something that is very useful for the government to track the movement of goods from your supplier location to recipient location. And if you get stopped by the cops in between, from Kerala to Coimbatore, Cochin to Coimbatore, if you're transporting goods, you'll be, of course, stopped by one set of cops anyways, and they will ask you for the e-way bill if you're transporting goods worth more than 50,000 rupees. E-invoicing is another compliance in addition to your return. E-invoicing is now necessary to what they're trying to do is they're trying to make returns, cloud based. So e-invoicing is a step towards that. And what they say is those having more than 5 CR in a particular year, e-invoicing is now applicable to them, where you get a QR code, invoice reference number, IRN, and based on that, the government will be able to track how much of sales you're making, whether you are paying GST, the correct amount, right on time. So e-invoicing and e-bills is pretty new, but this is also added to the compliance checkpoints for a company. Getting refunds from the government, an interesting point. Now, what happens is many of you, right, would be in the IT industry where you'll be exporting out software to other countries. When you export out software to other countries, there'll be no requirement for you to pay GST as such. Right? You can export without payment of tax, as it's called. The government is saying that, look, you are a privileged exporter, and therefore you are getting foreign currency, foreign remittances from abroad, and therefore I will give you a privilege in not paying GST. That is a benefit to you. So on your sales, of course, there's no GST, but you will incur a lot of money here on buying goods or services, within the state or outside the state in India. So for that, you have to pay GST. Now, the concept of GST is that you'll have to set off your purchase tax with your sale tax, right? The same under the same law. But if you don't have sale tax, there's nothing to set off with. So all your purchase tax will get accumulated. And the government says, okay, I understand that you are not able to refund and get that benefit out of the GST Act. And therefore, the government says that, look, you will have a lot of accumulated GST on your purchases. Please claim a refund. And you won't believe refunds are very fast these days, especially from the GST department. I'm not saying 100%, but at least 75% of the refunds that you apply for, if the documentation, everything is online these days, right? So if the documents are properly submitted online, then you'll get your refunds of whatever tax you already purchased from them within 60 to 90 days. In fact, in Kerala, especially in Cochin, the GST department is very friendly and they want you to apply for refunds. I got a call a couple of days back saying that your client, if it is an IT company, please tell the person to apply for a GST refund because we can give the purchase tax back to you, what you paid to us. That is the refund concept here. And this is one thing that you can definitely think of availing because in India, there's a lot of software companies exporting software outside the country and then they'll have accumulated GST, which they can get back from the government quite quickly. That these are three compliance under GST. The main one, like I told you, is about filing returns. And if you don't do that, there's heavy consequences. You can even lose your GST registration if you don't file within 6 months, right? Let's say we are sitting in March, 6 months down the line, you just forget to file your return. By June, July, and all that, they'll come and cancel your GST registration. And you know how the importance of GST registration these days. So filing returns is important. Then it was e-payable and e-invoicing and getting refunds from the government. The next one is Companies Act. And here, like I said before, the Companies Act actually was revamped, right, from 1956 to 2013. So that gap was there, and they waited a bit too long, I would say. And in the New Companies Act, if you open, there's a lot of sections just for interest, penalty, fine, disqualifications, imprisonment, jail terms, etc., etc. Right? So Companies Act has become very strict, and you have constant reminders from the Register of Companies, ROC, MC, and all that to keep you in check. Filing of MCA forms is quite important. It is the final step in your financial statement preparation. In this particular compliance, that is filing MCA forms, once the auditor signs the balance sheet in the PL, you are supposed to upload that into a particular form and then, compile that to a particular form, then upload it to the MCA. Everything is online space. So filing MCA forms, well, if you don't file MCA form, which is typically called AOC 4 and MGT 7, if I'm talking about a private limited company, if you don't, even for an LLP also, you have some MCA forms because LLP as well as private limited companies come within this MCA domain, right? So if you don't file your yearly MCA form, which is basically your financial data, and one part is of course the income tax department through the income tax return. This is to the Ministry of Corporate Affairs. So if you don't do that, there's a lot of consequences, right? Number one, if you don't do that within 3 years, then the directors of the company will be disqualified in the sense that their DIN will be inactive. They not only cannot be the directors of that company, they can never be directors of any other company for a certain period, right? So one company is non-compliance as a director. You being the director of that company will affect your directorship in other companies also. That's a heavy compliance issue, and the period of 3 years. If you don't do that, if you don't file MCA forms where you attach your financial statements in 3 years' time, 3 continuous years, then you can face with a disqualification from the MCA if you're a director. Right. The other one, of course, is that if you don't file your MCA form within for a period of 2 years, then your company will be listed as an inactive company, as a dormant company, and they can send out notices to you for striking you out from the Ministry of Corporate Affairs. Your name will be struck out, and then you can no longer you'll have to again apply for a new company registration, all that. But most important compliance here is the fact that as a director, if your company does not file the MCA form for 3 years, you have many cases of such compliance issues. 3 years is a very short period. In fact, continuous years, if you don't file your MCA return, if you just ignore that, then your directorship is affected in not only that company, but in all other companies as well, up to a certain point in time. Loan to directors is another important compliance. And here, what it says is that there are 3, 4 deadly sections in the Companies Act. Like it starts with 184, 185, 186, and all that. What one of the sections in that group says is about loans to directors. Now, what it says is that a director can give a loan to a company. Of course, in the initial days of your startup journey, you would need funding, right? And you will pull out from your bank account and give it to the company. So the company needs to pay salaries, buy software, and pay your consultants and all that. So you can give a loan to the company, and the company mostly these are interest-free loans. The company can repay you in installments at later period of time when things become greener. But the other way around is not permitted, wherein the companies cannot lend to directors. Now, what happens is the director can approach a bank for a loan. Why they put this section is one, and the main reason, according to me, is that this is an indirect loan to the director. A bank not giving loan to director because of a bad credit history, the company is giving loan to director. That's not permitted, right? Director cannot get funds from the company. So you will have to go through a lot of compliance procedures if loans are to be given to directors. Of course, it can be given if certain strict compliances are met. One such thing is your shareholders are all to be 75% of your shareholders should be in consent, right? A special resolution needs to be passed for a loan to be passed to a director, to be given to a director. And it should be according to the normal terms and conditions of the company and all that. So what happens is year end, 31st March, you will have some extra payments received by directors. Not extra in the sense that the directors would not have furnished the bills, the companies would not have booked the expenditure, but the company would have advanced certain amount of money to directors for travel or airline booking or whatever. So in the director's ledger, when you take it out from your software, you will have payment going to directors and nothing coming in because you have not booked that particular expenditure, right? The director has forgot to furnish the bills. He has not uploaded the bills online, or he has not given you uh, the airline bill for you to account for if you are the person accounting. So in that case, there'll be an advance that is receivable, right? The money is receivable from the director. There'll be an advance given to him at the year end, and that money should be. It'll look as though it is something that will be received from the director. But the action situation would be the fact that there'll be so many bills, so many vouchers, so many items of expenditure not yet accounted. His credit card statement would not have been forwarded to the company to go through it and account for the expenses, and the payment would have already been gone. So that will look like a loan to directors if it is not set off or if it is not adjusted within the year end. And what happens? All this gets picked up during audit. 6-7 months down the line, before the AGM takes place, you need to sign your balance sheet PL. At that point of time, we realize that look, there is a debit balance or an item that is receivable from the directors. This looks like a loan, director. In nature, it is not a loan. It's something that the expenditure is not booked against that payment that is made to directors. So to avoid that, it is better that you keep a check on that before 31st March, because if not 31st March, I don't think you will ever look at those kind of statements unless otherwise when the audit comes, right? So loans to directors something, and it is a Companies Act compliance which attracts 5 lakhs of penalty for each director, 10 lakhs for the company. Then there's some imprisonment clauses and all that for the director. So this should be taken care of, and loans per se should not be advanced to the director. It not only includes director, to his relative, to his partner, and if this particular director is a partner of a partnership firm, it cannot be given to that firm or to his relative or to his partners or partner's relative and all that, right? So there's a list of people to whom the director is related. To all those kind of people, you cannot give loans, or things should not look like loan to director. So that's one thing that you should keep in mind before 31st of March. FEMA 1999, and the person sitting on top of this is, of course, RBI. I'll just cover one point here. That is this thing called filing FCGPR for receiving funds. So there's one form that you should file with RBI if you're remitting funds abroad, and that is less of a hassle, less of an issue, because, like I said, remitting funds out of, uh, 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 receiving funds from India is not a problem. Remitting funds, of course, you need to file another set of statements with RBI. They'll be more stricter with that. Receiving funds is less stricter, but you have to file this particular form called FCGPR. So if you're receiving any kind of investments from foreign shareholders, from foreign companies into your Indian company, Indian firm, private limited companies, you need to get this FCGPR thing rolling. And this is a form that is filled, filed, and uploaded to the RBI, and they will come out with a letter that, okay, now you are clear to receive funds, right? So this should be done within so many days after you receive the funds. If not, then they will question what is the nature of the receipt of funds, and you to go through that hassle again if you don't do, or if you don't file FCGPR as such. So this is one common thing that a lot of investment receiving companies often tend to miss out. Just covering employee provident fund, um, and you also have, along with this, employee state insurance scheme also. Applicability: if the gross wages of your employees is um, below a certain limit, or the number of employees in your organization is above a certain limit, then you need to comply with Provident Fund Act 1952. There's ESI, EPF payments that need to be done on a monthly basis, just like your GST payments. You also need to, just like your TDS payments, you need to deduct from the employee. You will have one part called the employer's share of Provident Fund, and you have one part called the employee's share of Provident Fund, right? So all this will have be looked into, and if this act is applicable, then you need to pay the 15th of next month. That is when the due date comes. So you need to just check the limits. It is 15,000 for PF and 21,000 for ESI and 10 employees and 20 employees and so on. Both wage as well as number of people in your organization. It's not just for a factory, like for any service organization, for any enterprise, for any office establishment, PF and ESI Act is applicable. That's something that you need to take care. Along with this comes your labor welfare fund. Now, these days, labor welfare fund compliance is important, right? You randomly get people coming and knocking on your door and asking you whether you pay the labor welfare fund duties, the deductions and all that, something like your PF. And it's very meager. It's 10 rupees or 20 rupees per employee. That's something that you should take care of. So this sort of finishes our second segment, and it is something that we touched upon: the Income Tax Act, the Goods and Services Tax, that's GST, the Companies Act, FEMA, and your labor law, right? PF, ESI, a Shop and Establishment Act, and all that. So some important points from all these acts, I thought I'll cover in the span of 1 hour, so that you'll understand at least the topmost priority item in each of these acts, and then you can further research, dig deep, and check with your accounts team or your compliance person. Just find out if all this is taken and kept in check. Moving into the third segment, or I'll probably have this slide before that. The effect of non-compliance. Well, I did speak about this when I was taking each section or each compliance act. Non-compliance in the form of interest, penalty, disallowances, disqualification for directors when we talk about non-filing MCA returns and all that. Fraudulent fund can fetch you imprisonment, fine. You know, you may be having outside contract labor working for you. Well, did you know that you are the person who is liable to pay their PF also? So please check on that, because these things will hit you 3-4 years down the line, when a notice comes and they'll ask you to fish out data from the last 3 years, and that is when all this time and money that we were talking about earlier goes into unnecessary things. Loans to directors, there's a heavy fine, 5 lakhs. Imprisonment also comes if the gravity of the issue is quite significant. And others, of course, you have a one-time per day fine, which are quite irritating, right? You have it under GST, under MCA, because it's like a clock that is running against you. But if you don't file your GST returns on a monthly basis on time, then what will happen is your fines will just build up, right? And one more thing is that, okay, that late fee or that late fine for your income tax computation, that is something that will not be allowed as a deduction. So that's something that you should keep in mind. The third and the last segment, that probably the next 10-15 minutes I can take, is steps to ensure that compliance, right? Okay, so we did speak about the importance of compliance. Internally, it's important for performance management, for your KPI indicators, how you perform for the year, how you perform the next year, what are your strengths, limitations, goals, etc. We also stepped into the different kinds of acts and rules and regulations, and just took up the top items in each to make you understand how important it is, right? If you miss due dates in that particular act. The third particular section that we have, segment that we have for you here, is how do you keep in check, or how do you build an alert system so as to um, get reminded of all these compliance? Well, it's important that you prepare a monthly, quarterly, yearly calendar. It is important that you have a sitting with your account team. Let them prepare a calendar. Like, you have a daily task calendar that you look up either in the night or in the morning when you start your work. Similarly, let your accounts department have a calendar, either paste it on the wall, or nowadays you have these e-calendars which is available and linked to your work that you do, to your dashboard. So have that sort of compliance. In fact, uh, before we started the last audit, of course, this audit is just going to start from April. But before we did that, um, uh, from the firm side, the last audit, we mailed out a compliance calendar, which was, in my opinion, a good exercise that we did for the clients. And we told them that, look, this is the draft calendar for you. You can add on to this, and uh, all the important monthly, quarterly, yearly dates are in this. So please take a print of it, save it in your folders, give it to your account team, and let them, be aware of this. Because if not now, later these things could haunt you. When you're going through investment rounds, when you're going through buyouts and all that, valuations and all that, these things can uh, play a significant role then. So prepare a monthly, quarterly, yearly calendar with the compliance dates. You have serial number, you have monthly compliance, probably one for quarterly, one for yearly, and put the due dates. Right? It is not important that you put okay date of actual filing. Just have the due date in front of you. Put as reminders. Put as a reminders. Probably there'll be a lot. So put as a calendar, and that will be helpful. Something which we gave to all our clients previously for the previous audit. And if possible, I can share that with you as well. Fixing responsibility is important. You don't want the auditors to, raise issues and you scrambling on finding who is actually responsible for this. So fix the responsibility reads compliance, right? It is not that everything given to your accountant. You'll have one person probably doing your bookkeeping, right? That person itself doing all the compliance. I don't think that will work out for you as a company. So give it to uh, people who you feel will commit to this. Have a team in place, fix responsibility, right? You will have to tell them that, look, it is your responsibility to ensure these 12 returns of GST is filed in this particular year, and I don't want any late fees. Because if you accumulate all the late fees, interest penalty, then it is as good as a revenue item from the client. That will be the amount of the penalty that will be. So fix accountability and responsibility because that's important to understand how you can improve. Check compliance T-3, have 3 day a 3 day cutoff period, build a alert mechanism, have reminders in place. You can put a date to your calendar as okay, 31st March is my due date. Let me finish it off on 27th. This week, of course, 28th and 9th are going to be holidays, so you'll have to finish everything for 31st or 27th. In fact, all the payroll and all that usually it is run on Fridays, right? Month end. So a lot of companies will be preponing that payroll to Thursdays and Wednesdays and all that. So have a 3 day buffer time and build an alert system where you have the first reminder, second reminder. Because what happens if you do everything on the last day, there'll be a lot of issues, right? Um, the population size of the country, and everyone's trying to scramble through the income tax website and the Companies Act and GST site and all that. There's a limitation to which all these sites can take as bandwidth. So you need to keep that in mind and do T-3, T-2, at least T-1 for that matter, and ensure that it goes through smoothly without any hiccup. So building an alert system, fixing responsibility go hand in hand. You'll have to fix the person and build a process or a system wherein, okay, that person is alerted, right? You will also get a copy of their alert or probably the second or third alert you might get. And then you can check on the status for your morning meetings or on your weekly calls and all that. You can check out with the uh, compliance team for that particular state. So making a calendar is part one, and that definitely should be there in place. Fixing responsibility is part two, and checking compliance T-3. I want to take up two more items before I close, and that is inventory verification, and there's the other one that called as MSME payments. Now, inventory verification for all those who have inventories or dealing with raw materials and WIP and semi-finished and finished goods, you will have a year-end verification that's important. Both, if you want a separate report, if you have an investor that you're looking out for, he will definitely ask. If you're a stock trader company, he will definitely ask for a inventory verification and valuation report, right? Where an external party will have to come verify the inventory, fix the value, ensure that that is the closing stock of the company. And if there's any issue in that particular inventory report, then your investor will be taking his vote. So inventory verification or physical verification for that matter is important. You can have it as a separate assignment or part of your yearly audit. So have that. 31st is just coming. That is unfortunately on a Sunday. So you'll have to plan accordingly. Because 31st is the date when you will have to do the verification. If not, one day prior when you have to freeze your production, or one day after when you freeze your production, and take the stock as of 31st. So this becomes important because if inventory is not physically verified by an external party, only by the management, then that is not something that investors would want. So just note about this particular requirement if you are a stock traded company. Next one is the MSME vendor payments. Well, this is the recent headache that has come. I should be calling it a headache. It's a compliance that is being brought by the government. And what it says is that if you have payments pending to be given to uh, uh, small, micro, and small enterprises, right? MSME stands for micro, small, medium enterprises. So if you have payments to micro and small, well, what are micro and small? These are um, um, enterprises who are within a particular turnover threshold, within a particular in a fixed asset or a plant and machinery limit, right? The investments in plant and machinery. So basically turnover. So if you're dealing with those kind of vendors, small-time vendors who have obtained MSME registration, then you need to ensure that the payments are made. There's no dues before 31st of March. Now, under the MSME Act, you have a 45-day credit period, which is under the Act. So, barring that, if suppose the payment is pending to that particular MSME vendor for more than 45 days, like 60, 90 days, even though if you have an agreement with that particular vendor, right, you still have to make the payment before 31st of March. Well, what if you don't make the payment? The entire amount of expenditure will be disallowed. In other words, it will be added to your income and you will have to pay tax on it. So that is it's become a headache for those who are dealing with MSME vendors. And this is the latest rules that have been added in the Income Tax Act. We are yet to see the realistic problems that will be coming out of this once the 31st passes. But the bottom line is before 31st, you need to ensure one, who all are your MS, micro small vendors, right? Those who have a MSME registration. Identify them first through their registration certificates, list them out, find out what are the payables to them. Anything crossing 45 days since you purchased the item or the service. And if that is pending before 31st, please clear it off if you can, because otherwise the entire expenditure will of course be shown as an expenditure in your profit and loss statement, but for the purpose of tax computation, you'll end up paying tax on that because that will be turning out to be your as good as your income. So this is a heavy compliance issue that the government has come up with. The intent and the objective of this was to support the MSME sector. But of late, we are getting a lot of letters. In fact, one of my friends, he sent me a few letters from the industry in which his business is, and he told me that, look, I'm also facing issues, and these MSME guys have put this letter to the finance minister saying that, look, if you put this compliance issue, rather than saving us, the MSME guys, it is destroying us because now the big guys will not buy from me, right? I will not be able to offer credit for more than 45 days. And if they don't, if I'm not able to do that, then they will not buy from me. They'll buy from people who are non-MSME vendors. So the letters, the representations, uh, the requests are going from the MSME vendors itself to scrap this particular rule. But till now, there's no official communication that this is postponed or scrapped. This is something that we have been also explaining our existing clients and future clients and prospective clients and all that, that we have been doing that as a firm, and we've been sending out newsletters and informing them through mails that you need to sort of keep in check this compliance before 31st of March. This is something that you need to take care. So these two, I thought I'll just bring up. One is inventory verification, of course, for those dealing with inventory. And of course, you have MSME vendors. MSME trading is, of course, exempted from this. That is trading vendors. It's only your service and manufacturing vendors who will come within this bandwidth of MS, micro, small vendors. So that is one thing. These two are things that you should keep in mind. So if you have any questions, then you can always ask me here or you can send me a mail. I will probably, if you mail me, I can also mail you the compliance calendars that we have readily available for the coming financial year, right? 24-25, once this March is over. So what we do is in our firm, before we start the audit for clients, existing clients, we first give out the compliance letters and then correspond with them and start the field work. So if you want to ask any questions, you may feel free to do so. Otherwise, you can drop in a mail. This is the email ID of the firm, and then I can send over the compliance calendars to you, which will be quite helpful.
Participants, please ask your questions. This is a great time to get all your doubts clarified by Mr. Deepak. Okay, Ms. Sridevi has asked for your contact details, sir. So could you please post it in the chat? Okay. Yes, Mr. Raj, please unmute yourself and ask the question. Mr. Raj, are you there? I think he's not available.
I think he's typing something.
Yeah,
on the chat.
typing, yes.
Hi, Vipin here. Can I ask a doubt?
Yes, Vipin, go ahead.
I have a EdTech company, you'll be knowing it. Okay. And mine is registered with MSME. And in last year, this academic year or this financial year, you can say, we had 3 pending bills from one particular school. And can we apply same like MSME thing on this one? Like, do they have to clear all the dues of mine within the 31st March? So this dues
Well,
are started from last June.
I understand. So, like I said, definitely one, if they don't make so last June, right?
Yeah.
Okay. So as far as see, in this case, you are the MSME person. So from that perspective, if you have not got your dues, because if you go by the MSME Act, you need to receive within 45 days. So if you have not got your payment, of course, 45 days is, in your case, it is a couple of years.
Yeah.
There's this a forum that you can approach called the MSME Redressal Forum. I think you can get more details of it on the MSME Act. There you can correspond with them and they will be in touch with your customer to clear off your dues because you are an MSME vendor. So that redressal forum is quite responsive in the sense that they will help you to collect the dues. They'll act on behalf of you. They'll be able to collect the dues from them. And if everything's okay, not only your dues, they'll have to pay the interest also on that, which is calculated in a particular rate. So definitely, you can approach this particular forum if your request to your customers falling on deaf ears. You can approach the MSME Redressal Forum, and they'll be able to take steps to collect whatever is possible from your customer.
And see, I said no, 3 invoices are pending. One is like we have just raised recently, okay, March 15th. Due date was March 15th.
Right.
So that one, I think I don't want to. So that we can give another 15 more days, no, 31st.
Yeah. So 15th, if you raise, then there is a 45-day period. That is the cutoff period.
Yeah.
That is in your case, you have a 45 days. The agreement with the customer would be, let's say, 90, 100 days, 60 days, whatever. But by the MSME Act, it is 45 days. So if you have agreed with the customer that, look, 90 days is okay. And if you have not got the payment 90 days, you can approach the forum because anyway, it's crossed 45 days. If you don't have any agreement with the customer, then 45 days is by default the credit period, beyond which you can, if you want the dues, if you not got it, you can approach the forum. So 15th of March, you still have time probably. 45 days is not yet over, plus or whatever is in your contract.
Yeah. Okay. Thank you, Deepak.
Sure. Thanks, Vipin.
Anybody else would like to ask a question? Okay, so I think we should wind up the session. So, yes,
There's
Jose.
I think there's a
in the chat.
question Mr. Raj has posted.
One minute.
a private limited company having two directors, and if all MCA compliances are in, Deepak,
Yeah, sure. I think what it says is a private limited company having two directors, if all the MCA compliances are in line, will directors own IT filing to income tax, that is ITR, has it got to do anything with the compliance of the company? Well, not directly. One, because everything is in line, there is no issue. Now, suppose everything was not in line, right? And if you are director of the company under MCA or a defaulter, you've not filed for 2-3 years, whatever. When you are filing your ITR, there is a section where you have to disclose that, hey, look, I am the director of this company. There is no requirement for you to disclose that, okay, the company has not filed 4 years, or the company is regular in filing, or company's financials is this, because that is your own financials, your own ITR, sorry, where you just disclose, okay, this is my remuneration for the company, and I'm going to pay tax as an individual director through the ITR. So directly, no. The income tax department probably can check with the MCA, and then they can get the data of the company. But directly, there'll be no issue if your company is defaulting with the compliance issue. If your TIN is still valid as a director, you can file your ITR. There'll be no issue as a director.
Think we don't have any other questions. Do we have any other questions? Okay. Right. Okay. So thank you so much, Mr. Deepak. Your knowledge was really amazing. Every sentence that you spoke had something, for us to learn. So thank you so much for that. And I thank the audience for being so, attentive. That's one thing I noticed. And thank you, TiE Kerala, Mr. Jose, and Ms. Divya, who's not here, for all the cooperation and help. And thank you, Mr. Deepak, for taking out time. I know as a CA, at the last minute on a 26th of March is probably like, every minute is important. But anyway, thank you for, taking time for us.
My pleasure.
Right.
Thank you.
Thank you.
Thank you, Jose. Thank you, Swati.
thank you, Deepak. Thank you all.
Bye.
Bye. Thank you.